Hello everybody, welcome to today's webinar, How to Keep Employee Benefits Costs Down in a Surging Market. You've made a great choice here today hopping on because we are going to cover a lot of great stuff. I'm going to teach you a step-by-step strategy on how to keep your health insurance costs contained in a market that is only seeing increases. These are the same strategies we've used with our clients to save millions of dollars a year. We have solutions for all types of businesses. If you're a 500 employee plus company, or if this is your first time offering benefits, we have a solution for you. So strap in and let's do this. Before we get started, I wanted to go over a few quick things to make sure that you get the most out of this webinar. I ask that you eliminate all distractions, pay close attention, and take notes. I'm not here to give you some non-existent secret for getting health insurance for free, but what I am here to tell you is that for virtually all companies, there is a great insurance solution out there that will give you the benefits you want at the cost you're looking for. You just need to know where to look and you need to take action. Today we will show you where to look, and it's up to you to take action and to implement. So before we get started, let me tell you who this is for, just so you know if you're in the right place. So this is for you if your business has been seeing a rise in healthcare costs over the last couple of years. If you're concerned about company morale, if prices continue to rise for your employees. If your business is near or exceeding its employee compensation budget. If you or your employees are spending too much time administering your benefits plan. If you would like to attract and retain high quality employees, if you would like higher employee satisfaction, or for anyone that would like to reduce employee benefits costs while improving the coverage. In the next 30 minutes or so, I'll tell you proven strategies to reduce employee benefits costs while increasing benefits quality, how to use employee benefits to attract and retain high quality employees, proven strategies to improve employee productivity, how to leverage technology to streamline benefits and massively cut hours required to administer benefits, what to do to make sure your company isn't overpaying for benefits, how to effectively outsource your HR and benefits to eliminate burdensome and time-consuming processes, allowing you to focus more on the important stuff like growing your business. Be sure to stay tuned until the end because we will be providing 3 different guides to you. That is the guide to implementing benefits for your company the right way, a guide to the top 5 employee benefits technology platforms available today, and the guide to compliance regulations based on your company size. Before we get into that information, I want to check in with you to see where you're currently experiencing, if you're currently experiencing anything on this list, and if any of this sounds like you. So do you feel like insurance costs have been rising more and more? Are you and your employees feeling the burden keeping benefits costs affordable? Are you struggling to attract and retain high quality employees? Are you having issues effectively administering your benefits plan? Do you feel that you are sacrificing the quality of your benefits to keep them affordable? Are you unsure how to abide by compliance regulations for your benefits? Are you spending too much time on your benefits processes? And finally, how much time and resources are you spending implementing and administering your employee benefits plan when you could be focusing on growing your business? But I need to tell you that none of this is the real problem. The real problem is insurance costs are rising, and it's a challenge to keep benefits affordable for your employees as well as your business, and you don't want to risk losing your employees due to drops in quality of benefits. If you had the right strategies in place, you would be able to reduce your employee benefits costs while increasing benefits and minimizing administration time, resulting in happier, more productive workforce. The bottom line is that yes, you can implement an affordable, high quality benefits package that attracts and retains high quality employees. This results in higher levels of productivity and company growth using my unique proven strategies, and these are the ones that we are going to learn today. When you do this and when you put this into action, you will have more money to invest in the growth of your business. You and your employees will spend less time administering benefits. You'll have more productive employees. You'll be able to attract and retain higher quality employees, and your employees' morale will be higher. Now, before we get into this, I want to give you a brief bio of who I am so that you know who I am and why you should pay close attention to what I'm about to share with you. So I am an expert in all aspects of employee benefits, focusing my career specifically in this specialization. I saved a client over $500,000 per year on their health insurance premiums using strategies that I will show you here on this webinar. And I'm a licensed broker and work with virtually all employee benefits solutions. Now, as I mentioned, I saved one of my clients $500,000 per year on insurance premiums. A potential client, they approached me as they were getting close to a cost renewal or major cost renewal at their renewal, and they had already searched all the standard markets available to them for alternative options. When they enlisted my help, I found them a level funded plan, which we'll discuss later, that not only decreased their costs by 50%, but it increased the benefits quality versus what they had the prior year. Both the business and the employees are now paying less, significantly less, for their benefits, and they've been ecstatic about their plan. Another business that I worked with needed to protect against the Affordable Care Act penalties. This is for any applicable large employer, that's any company that's over 50 full-time employees, and a business reached out to me that was required by law to offer affordable health plans. They had never offered health insurance before, but had grown so fast that they now needed to offer insurance. And they had to put it off for too long, and they needed coverage as soon as possible. I found them a plan that allowed them to offer not only affordable coverage on a budget, but it also provided comprehensive coverage for their employees. Once you put this to work, and the strategies that we will go over during this webinar, you will never again have to worry about the volatility of the health insurance market, worry if the company can budget for employee benefits, and worry about employee satisfaction with their benefits. So let me ask you, is your current benefits package providing the coverage that you want at the right price? Let's move forward and we'll talk about how you can do this. All right, let's talk about the steps to take that will help you get the benefits you want for your company. There are 4 steps that make all of this work together. Pillar 1 is knowing your options. There are many different solutions for benefits coverage, and each one can be the best route for you depending on your situation. I'm going to go over all of these options so you will have a better idea of which will be best for your company. Now first, there is the standard market. This is what you usually think of when you think health insurance. It's otherwise known as fully insured plans. These plans cover you for all benefits required through the Affordable Care Act. They do not ask any health questions to enroll, so anyone can enroll. And all the rates for these plans are fixed by law. The rates are actually filed with the Department of Insurance every quarter, and those are the rates that the plan must be sold at. So you will typically see these plans named as either bronze, silver, gold, or platinum, and these metal tiers denote the quality of the plan. The standard market is where most companies go to get their benefits plans. The problem is that most of these plans in the standard market have been seeing steep increases in premiums year over year over year. And since plans in this market are not allowed to decline people with higher health risks, the risk pool is now much riskier, which is why we are seeing these cost increases. On to self-funded. Self-funded and level-funded plans have become very popular in recent years to compete with the standard market rate increases. Self-funded plans are exactly as they sound, in which the employer takes on the risk of an insurer and provides funds to pay claims with the exception of their stop-loss limit. The stop-loss is the point at which the company has paid out so much in claims that they no longer pay out for future claims. This protects the business from astronomical claims from their employees. An insurer must be found to be the stop-loss insurance carrier, and a third-party administrator must be contracted to administer the plan and process claims. Now, while about 63% of employers are fully or partially self-funded, these types of plans used to only be reserved for large employers above at least a couple hundred employees. However, level-funded plans have made it possible to offer self-funded plans to much smaller companies as low as 10 employees. Now, please note that in California and New York, because of the specific laws in those states, level-funded plans do not become competitive until about 100 employees or more. But virtually all other states, level-funded plans can be a great option for smaller companies. They are just like self-funded, except for the stop-loss limit is much lower, protecting smaller companies from unforeseen claims. Some level-funded plans will require health questionnaires be answered by the employees. Some require an audit of the employees' prescriptions to determine risk, and some don't require health questions at all. It just depends on the carrier. Another great aspect of self-funded and level-funded plans is that any leftover money in the claims fund at the end of the year will be returned to the business. Now, HRAs are health reimbursement accounts for companies that want to offer a high-quality health plan, but are seeing rates as too high on the standard market. They can turn to an HRA, and it can be a great option. Basically, what a group typically does is offer a bronze-level, fully insured plan to its employees, but then the employer agrees to pay a portion of the copays and coinsurances for services for their employees, effectively making the bronze plan function more like a gold or a platinum plan, or maybe even better. The business can end up saving money on the HRA versus a platinum plan because they are only paying for the bronze level plan, and the money saved from the difference can go towards paying claims that the employees have, rather than with a platinum plan on the fully insured market where each month the premiums go into the pocket of the insurance company. With an HRA, the business pays only for the bronze plan and then only makes additional payments if their employees have claims with preset limits to avoid high costs. So with the HRA, lower claims means more money in the pocket of the business while still providing high-level benefits for their employees. Whereas a fully insured platinum plan, low claims will still result in all of the money going to the insurance company. Moving on to PEOs. PEOs are professional employer organizations. Now, this solution is a little more hands-on, but it can be a great solution for small to mid-sized companies. A PEO essentially takes over your employees, handling the payroll, human resources, workers' compensation, and employee benefits all in one package. The benefits of going this route is that the employees get pooled into a much larger group of employees and then have access to large group insurance rates, which are lower even though they work at a smaller company. So not all companies qualify for a PEO. It depends on the industry and the health of the group. For companies that want everything handled all in one place, this is a great solution. The technology that they have to administer the benefits, payroll, and human resources tends to be very strong, which makes things easier for your employees and for anybody who is processing any benefits changes. For prescription customization, prescription drugs are the most complex yet most easily controlled cost associated with health benefits plans. The removal of lifetime insurance caps under the Affordable Care Act has led to a massive surge in prescription costs in recent years. And additionally, Third-party administrators and insurance carriers collect extraneous rebates, administrative fees, and dispensing fees. A prime example of this is when an insurance company charges a $20 copay for a drug, but only passes $18 of that along to the pharmacy. And with prescription customization, you can now conduct a financial analysis of existing prescription plans and employees' prescription needs with all clients. Now, most businesses with under 1,000 subscribers are actually losing 25 to 45% of their pharmacy plan savings every year. The benefits of the plan analysis is to show what dollars are still being left on the table and how we can improve on the existing plan with no changes to the benefits or to the networks. And finally, MEC and MV, or MEC and MV plans, stand for minimum essential coverage and minimum value plans. These plans are meant for applicable large employers, anybody above 50 employees that needs to offer health insurance for their employees as defined by the Affordable Care Act to protect and these plans are meant to protect the business from the tax penalties at the end of the year for offering affordable health coverage. These plans also protect employees from needing to pay the individual penalty for not having insurance in place. However, that's about as far as these plans go. They are very inexpensive. They are a very cost-effective way to protect from the applicable large employer penalties and for the employee's individual penalties, but they do not offer significant coverage. So their main benefit is that they are cost-effective and they avoid the penalties. So that's the end of Pillar 1. These are the main options you should know about when researching insurance options for your company. Pillar 2 is understanding the laws. There are a number of laws that will guide how you can best set up and administer the benefits for your company. Now, some employers want to contribute a higher percentage or have a lower waiting period for their managers versus their normal employees, for example. Now, this is allowed by setting up employee classes, which can be distinguished by managers versus normal employees. It can be distinguished by seasonal versus permanent employees, full versus part-time employees. Any class that's a legitimate class, you can separate the amount of waiting period that employees have to wait until they are offered benefits, and you can also separate the amount of contribution that the employer will put towards the employee's benefits. You just want to make sure that you set up the employee classes. When you set them up, you do two things. You want to, one, make sure that these are legitimate employee classes and that you are not preferring one employee over another without justification, and two, that all eligible employees are being offered the same benefits. So while certain classes can receive more contribution from the employer or lower waiting periods, all eligible employees still need to be offered the same plans. This brings us to non-discrimination laws. Basically, with non-discrimination laws, it means that all employees that are full-time, which is defined by the Affordable Care Act as working 30 hours per week or more, must be offered the benefits plan through your company. You can offer certain employee classes, as we discussed, different contributions and waiting periods, but if two employees have the same job, you can't offer one more contribution just because you like them more or for any other arbitrary reason. This would be a form of discrimination and would invite fines by the Department of Labor if they were to audit your company. Now, in ALE, we've discussed this a little bit, is an applicable large employer. These are companies that are required by the Affordable Care Act to offer affordable health insurance for their employees. To be considered an applicable large employer, an employer must have an average of 50 full-time employees over the preceding calendar year. For a plan to be considered affordable, the lowest cost plan available to the employee must be about 9.5% of their income or less. I say about because the affordability percentage changes a bit each year. Now, the fines for not offering coverage are substantial and can easily cost applicable large employers hundreds of thousands, if not millions of dollars per year. So it's certainly better to get coverage in place than deal with these fines. Moving on to COBRA. COBRA is the continuation of coverage for employees when they leave your company. When employees leave your company, they can continue their coverage, but you as the employer no longer have to pay for it, and the ex-employee picks up the whole tab. When a company has less than 20 full-time employees, the continuation of coverage is not through COBRA, but through state continuation. And state continuation is administered by your insurance carrier and requires little to no administration on the part of your business. However, if your business is above 20 employees, then your company is subject to COBRA, which means either your company or a third-party administrator must run your COBRA, sending out benefits notifications to ex-employees and handling the collection of their premiums. So if you're above 20 employees at your company, you will most likely want to enlist a third-party administrator to handle your COBRA. Okay, and finally, we get to small group special open enrollment. This comes around once a year. During this time, all fully insured carriers on the standard market reduce their contribution requirement down to $0, meaning the employer does not have to contribute anything. And participation requirements go down to 1, whereas during the rest of the year, most carriers require anywhere from 50 to 70% of eligible employees enroll. This is for groups only with less than 100 eligible employees, but it's a great option for companies that are concerned about meeting participation or if they cannot afford the higher contribution requirements set forth by the carriers. Please note that while the carriers relax contribution requirements here, the Affordable Care Act still requires the plans to be affordable for applicable large employers. Now, this one time per year is between November 15th to December 15th, and it's for a January 1 effective date. So this occurs once per year, again in between November 15th and December 15th for a January 1 effective date. On to Pillar 3. Now, Pillar 3 is efficient administration. Pillar 1 makes sure that you are able to find the most cost-effective health plans for your company. Pillar 2 makes sure that you don't pay unnecessary fines by being unaware of laws and regulations. And Pillar 3 derives from the old adage that time is money. The more efficiently you can administer your company's benefit plan, the less it is going to cost your company in finite resources and man hours. So, the first piece of the pillar here is technology. This day and age, there are plenty of technology platforms available to administer your benefits, and they all have their own pros and cons. The main basics you will want to make sure that your platform has is paperless or online enrollment, employee and administrator logins, and employees should be able to see all their plans and pricing on the same portal and enroll themselves and their dependents right there in the platform. Today, top benefits platforms will also integrate with payroll and human resources functionality. This means that payroll deductions will automatically be pulled from an employee's paycheck once they enroll through your benefits platform. Human resources management will allow you to onboard new hires, track vacation and paid time off, and provide company-wide updates and notifications. For educating staff, it is important to make processes as efficient as possible. Your human resources department should be educated on when and how to best notify new hires that they can enroll in benefits. Your HR managers should know what to do to notify the termination of an employee from a benefits plan, and they should know how employees can go about making any changes. Finally, your broker or trusted advisor will typically provide a back office staff for you that will handle the vast majority of the plan administration, so that all your employees really need to do is notify this back office staff that a change needs to be implemented, and then the back office staff will take it from there. Now, this back office should also provide enrollment meetings each year during open enrollment and educate your employees on the benefits and plans being offered to them. Let's jump into a few case studies to look at how the pillars we've covered so far can be implemented. So let's look at the company we discussed earlier in the webinar, which we saved $500,000 annually on their benefits, and how we implemented the first 3 pillars for them. Using pillar 1, we searched through all the options available in the market. We found that there was a great level funded option available to this group based on their demographic and company profile, and we were able to cut their costs by 50%. Using pillar 2, we made sure that all the benefits were considered affordable by the Affordable Care Act and made sure that the company was not going to be subject to fines. And we set up COBRA administration and made sure non-discrimination practices were in place. And using pillar 3, we set up the top of the line technology to manage all employee benefits, including onboarding, enrollment, termination, and changes. And we set up a back office staff to handle processing at no cost to the business. For our second case study, we had a client who did not think they would be eligible for a self-funded strategy and never considered looking into it strictly because they had an employee who was taking a prohibitively expensive medication with the cost around $1,200 per month. Because of this, the client was stuck on an above-market, mid-market health plan with little to no alternatives available. Our analysis of their prescription needs, along with our knowledge of the industry, allowed us to provide a long-term solution for our client. In many cases, we would be able to implement a specialty drug carve-out, opening up additional benefits avenues that were previously closed. But in this particular case, we were able to have the manufacturer cover the cost of the prescription in full due to the type of prescription and other income variables, inevitably allowing us to save 32% on premiums with a richer benefits package. Now, finally, to close out the 4 pillars, we are on to pillar 4. This is the most important of the pillars. And honestly, if you can handle pillar 4 correctly, pillars 1 through 3 will take care of themselves. Pillar 4 is to partner with a trusted advisor. With the information you've learned today from pillars 1 through 3, you know what expertise a trusted advisor should have to work with your company, and you can now vet them properly. They should help with finding your benefits plan, be your benefits administrator back office, provide technology platforms to increase efficiency. They should be compliance experts, provide HR and payroll assistance, and help with employee education and host enrollment meetings. One of the best parts is that a trusted advisor most often does not cost your company anything. They are paid by the insurance companies to bring them business, but the cost is typically not passed along to you as the client. Because all insurance companies pay the brokers about the same commission, the brokers have no incentive to provide you a worse plan just because it pays more commission. Good brokers understand that they should always act in the best interest of their client, because that is how long-lasting relationships are formed, which is much more valuable than a short-term gain by providing something that the client does not need. Once you find the right trusted advisor or broker, they can educate you on what you need to do for the first 3 pillars and help you implement a great benefits package for your company. So now you have a deeper understanding about how to implement a great benefits package for your company. These foundational tips are just the beginning of what is needed to implement your benefits the right way. Don't make the mistakes that others overlook. The key to doing this is knowing the system and exactly how to implement benefits from A to Z. This is the secret sauce to making this work for your company. And remember, Yes, you can implement an affordable, high-quality benefits package that attracts and retains high-quality employees, resulting in higher levels of productivity and company growth using these expert strategies that you learned today. So today, I promised, and I'd like to recap, that we would cover proven strategies to reduce employee benefits costs while increasing benefits quality. We covered how to use employee benefits to attract and retain high-quality employees, proven strategies to improve employee productivity, how to leverage technology to streamline benefits and massively cut hours required to administer benefits, what to do to make sure your company isn't overpaying for benefits, and how to effectively outsource your HR and benefits to eliminate burdensome and time-consuming processes, allowing you to focus more on the important stuff like growing your business. So here's what you need to do this on your own. 1, make the commitment to take fast action. 2, follow a time-tested and proven system roadmap. And 3, locate and hire someone who is the best at this and have them help you drastically cut down the learning curve. These three things, if implemented, will drastically change your current reality, and it will do it quickly. Now, what my system really is a proven blueprint to get you the benefits that you want for your company while keeping costs contained and employees happy and productive. This is how you keep your business and your compensation package competitive. Now, if you implement everything taught here today, in the next 60 days, you will have a strong, affordable, and comprehensive employee benefits package. Have a benefits package that provides the benefits you want while meeting your budget restrictions. Attract and retain higher quality employees. Have a more productive, happier workforce. So what would it mean for you to have a benefits plan that makes you have a more competitive compensation package than your competition? What would it mean for you to attract and retain top quality talent in your industry? What would it mean for you to have employee morale be higher, 6 days reduced, and employee productivity at an all-time high? What would it mean to have confidence that you can contain your benefits costs much better than most other businesses? An even better question is, what is it costing you not to have a competitive, affordable employee benefits package in place for your company? Are you missing out on attracting and retaining top quality employees or spending more money than you have to that could be reinvested into the growth of your business or into your pocket or even used to go on that vacation your spouse keeps telling you to take? Well, the good news is that you have a choice. You can take care of what I've been talking about and do something about it now. Or you can continue your company in the same direction it's been going to get the same results you've always gotten. But if you're still here right now, that tells me that you're still here for a reason. Maybe you've been experiencing rise in insurance premiums firsthand. Maybe you've lost employees to competitors that have a better compensation package. Whatever it is, if you want to make that change and start getting the results that you want, then here is what I have for you. Invest in success with me as your trusted advisor, and here's how I can help you. I will take the burden of all of those pillars that we discussed off of your plate. We will explore all of the benefit solutions for your company. We will set up your plan so it is in compliance with regulations, and we will implement the technology and the back office necessary for easy plan administration. Now, that being said, this is not for everybody. There are some requirements for this, and this is only for people who are serious about implementing an employee benefits package for their company, have an established business, are willing and able to follow directions, and are open-minded about working with somebody new. However, if that is you, go to nci.youcanbook.me and book a free consultation session with me. So you might be asking why I'm doing this, and really there are multiple reasons. The first is that I genuinely enjoy helping people. Secondly, when I became successful at this, I had a lot of people calling me asking for help. So I knew I could make a positive impact on others on a larger scale, which is why I created this webinar and my program. This is also how I pick up clients from time to time, and once we speak, you may want my help. And if that's the case, then we can talk about that. But either way, you'll get real help regardless. And by the way, on the call, there won't be any high pressure sales tactics or anything like that. If it's a great fit, that's great. If not, that's fine too. But you'll at least have the plan you'll need to start getting the results you want. So go ahead and go to nci.youcanbook.me and book your free consultation with me now. Here's what you can expect. When you go to my website and book a call with me, I will ask you about your business's current benefit situation and your benefits goals. From there, I will put together a game plan that you can follow to implement the best policy for your business. But do it now because I only have so many companies that I can work with at one time. So go to nci.youcanbook.me to book your free benefits consultation. As I promised at the beginning of this webinar, I will be providing you with the following 3 guides for sticking through to the end of this webinar. I'll be providing you with the guide to implementing benefits for your company the right way, the guide to the top 5 employee benefits technology platforms available today, and the guide to compliance regulations based on your company's size. To get these guides, just send me a quick email at eric@newcityinsurance.com. That's ERIC@NEWCITYINSURANCE.com with the subject line webinar guides. Feel free to send me any questions you have on the materials that we've covered so far as well. All right, everybody, that's it. I appreciate you all spending some time out of your valuable day with me. We covered a lot of great material, and I can't wait to hear from many of you in our consultation calls. Have a great day, everybody.